Hi, guys, and welcome to the 20th episode of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Um, Crazy week, the most destructive week I've seen in a long time. Uh, um, as usual, let's just get started. As usual, we're going to start with the S&P 500, the SPY. Okay, and this is the week Monday, Tuesday, Wednesday, and then Thursday, Friday. And if you can see here, the Friday was a devastating day with huge volume. Okay, this is the biggest volume that we've seen since when? Since all the way. Oh, can't even see it. Let's see. Maybe during the beginning here, the beginning of 2022 bear market. This day right here. I don't know if you can see it. So this volume eclipsed it every single day up until what is that? January 2022, when this market started tanking. Could this be a precursor to what's happening here? Well, we'll see. Okay, so this is going to be short and sweet because this market has turned into basically a binary outcome. Okay, you can ignore almost everything and just stick with the two outcomes that we will discuss sooner. But first, let's talk about the technical picture. Last week, this was the Friday of last week. This candle right here, it still looked good, okay? And we mentioned that it shows some moving averages. It mentioned that we dropped below the 200. The blue line is the 200 moving average, 200-day moving average. We dropped below it, we hit it, and then we came back down on Friday. That's a very bearish sign. Okay, that's what we said. The technicals on last week were bearish because of that fact. And little did I know they would turn. I mean, the market finished at 555 last week on Friday, and now it's like 505. It literally lost 50 points, like a 10% in 1 week. Okay, it's crazy. But it started out very well. Like if you can see, Monday, Tuesday, Wednesday, it was almost forming a double bottom. Okay, and we had good technical indicators. If you see here, if I look at the RSI here, these things were. It was a positive divergence because as it went lower on this day right here on Monday, the RSI was higher than the previous day's low here, the previous low of the recent, let's say, month. Okay, so this broke lower, and yet the technicals, this was higher. So it was looking probably like, technically speaking, like it could break higher. We had like a double bottom. We can go higher, maybe here, around these levels, in the coming week or two. Okay, but as we said before, starting this episode, that it's just a binary outcome right now, and that means it's all down to Trump. Okay, on Wednesday we waited for inauguration. What do you call it? Not inauguration day, but Liberation Day, and right after he was talking. Well, actually, when he first started talking, the markets were up. If you can recall, on Wednesday, the markets closed around 564, and it was like at 570, 571. So the markets were up like maybe 1 percentage point or so, because as Trump was speaking, it made it seem that he was just putting up like 10% tariffs across the board. But then when he brought out that little chart of his, the market just tanked. Okay, and then Thursday and Friday, destruction. And like we said, Thursday, I thought Thursday was huge volume. This volume bar right before was pretty big, and Friday eclipsed it. Okay, so here we had massive capitulation. Past 2 days, people are getting the hell out. Okay, and as we can go, we always go to the fear and greed index here. 4 on Friday. I've never seen it this low. This is like worse than COVID. People are just panic selling, getting the hell out. And on Thursday, the AAII came out, 61.9% bearish, which is the biggest reading in a year. So after Friday, we have sentiment in the toilet, understandably so. Okay, this is like massive liquidation. Okay, and like we said, the outcome is binary. It all depends on Trump. He has to start talking uh, bullishly or dovishly or whatever you want to call it. He has to he has to talk back his tariffs because this is ridiculous. It's getting crazy, okay? Because we closed at 505, and if you recall, here, this point right here was the giant breakout at 480. Okay, that's why I have this blue sideways marker right here. Okay, this blue line here denotes the previous high of the S&P 500, and we're close. One more day, like on Friday, like on Monday, something bad happens, like the trade war gets like doubled down on everything. Everybody starts talking hawkish. We're gonna hit that for sure. We're gonna hit the previous high, which is like a complete retest. This is crazy. That's a big, that's like, what is it, a 20% drop? I'll have to do the math, have to do the calculations. Like 600. Yeah, it's a 20% drop. From 600 something down to 480, that's 120, 61. Yeah, it's like a 20% drop from here. And we're close. We're probably like at 15% here, 16, I don't know, which is a huge drop. So the market, technically speaking, everything is breaking down. We are bearish, and it all depends on Trump. Everybody has exhausted themselves. However, we're so extreme that we're probably going to get an oversold bounce sometime. Okay, and this oversold bounce in bear markets is vicious. It could be 5, 10, 15%. Okay, a 10% bounce won't be that much. It'll get us to 555, which is like right here, back to the 10% that we lost this entire week. So it's not unreasonable. A 15% might get us around here, the 565, 570 area. Okay, so here, another thing you should note is that 200 is starting to roll over, and the red is the 50. If that crosses, that's a death cross. Okay, and that's very, very bad. So even if there's no death cross, which it probably will be if we take it, if the days go by, like if the next week or two, this is probably going to cross. It's going to come down very, very hard. So this is a very devastating move technically and fundamentally because it's all down to Trump's tariffs. Okay, so that's it. That's why it's so easy. It's so binary now. You can just throw everything out the window. We have macro. I mean, okay, let's briefly talk about the macro that came out today, this week, I should say. ISM Manufacturing came out. It was at 49, below the 50. So manufacturing started to contract again. We were hoping that it would stay up above 50 these past 2 months, but no, it came down, which is not good. And then the services also came out, and the services at 50. Services very rarely goes below, like if you look at the 10-year, very rarely goes below 50, but we're close to it there. Right here, we're at 50.8. So you have manufacturing going into contraction, services going down. We also had the non-farm payrolls that blew it out of the water. So this is not a good, I mean, here's where a case where good news is bad news because Powell will probably not cut rates. I don't know, maybe if the economy is very bad, but here the chances of cutting rates are less if the worker is holding up. So that's why that macro point, the jobs didn't help. But really on Friday, it wasn't the jobs that made the market tank. It was obviously China coming in and saying that we're going to retaliate with 35% tariffs. That's what made this candle here and this big candle here. This day would not have happened if China didn't retaliate. Okay, it could have been maybe a consolidation day or maybe fill in the gap a bit here, but China retaliating is very big because China is the biggest trading partner of the States, and those two big gorillas go to war, it's going to be very bad. Okay. However, I'm still expecting some kind of oversold bounce. Okay, and it's either that, it's binary. We get some kind of oversold bounce or no bids, which is crazy to think of. I've never seen it. It's like the flash crash at 2010 again, but I'm leaning towards some kind of bounce going on maybe next week or the week after. Hopefully over the weekend or Monday or something, they dial back this rhetoric because this is crazy. Okay. Of course, we also had initial claims, which came down to 219. So that's good. The people are not filing for unemployment. This is all tariff related. It doesn't matter. So you had okay. I mean, you had the jobs report was okay. You had the initial claims, which are good, but you had the ISM manufacturing and the services going down. So not very good. It's like a mixed bag when it comes to the macro, but it doesn't matter. Okay, the macro just throw it out the window for now. Okay, because of this move, you can check out the Fedwatch Tool, where we look at what are the chances of an interest rate cut coming up. So here the Fedwatch, this was almost a nothing. Okay, here's a 4.25. This is no cut in May. This is May of 2025. And this was like at nothing, like 3-4% at the beginning of the week. And now it's at 33%. There's a realistic chance, probably a realistic chance, off the books chance, 1/3 chance of cutting in May. And if the market keeps going down, this is going to go higher for sure. Okay, but let's look at all of 2025. So for sure we're going to cut in 2025. That's what the market says. Okay, because now we're at 400 here. But the most likely outcome is 325 to 350, which is 1 percentage point, 100 basis point cut. The market is really seeing an elevated risk of a recession, and the Fed cutting 4 times in 2025 is meaningful. Okay, so the market is getting ahead of the analysts are getting ahead of the recession. Okay, so that's what they're thinking is going to happen going forward, and that's it for the macro. So let's talk about. So wait, before we move on, let's reiterate that the technicals are clearly bearish. We had some kind of double bottom here that broke out on Thursday and Friday. Okay, every time we have a chance to break out, we go down. So this is a very bearish thing, and I'm expecting a bounce probably, but we're probably not going to get back to highs. This is very technically damaging unless a miraculous thing happens between Trump and every other country in the world quickly. I don't see this recovering. So even though we're not down 20%, this is still we're very close to it. If we get to this level right here, which is the 480 breakout, this is like bear market. You should be looking at this market through a bear market lens, and any bounce will probably be short-lived and will go even lower going forward. Okay, so all the macro gets thrown out the window when you have this one fundamental thing coming your way. Okay, a couple of things that I like to note is that on Thursday and Friday, look at what happened to the market. Okay, but also like commodities, like gold, got destroyed. Okay. Not the whole week, like the whole week gold was holding, even Thursday was holding, but Friday gold took a hit because, like we said, this candle right here, this a little bit, but this candle is liquidation. Okay, and when people liquidate, they have to hit everything with a bid, and that includes gold. It's a very liquid market. Okay, gold got liquidated. Is this the last? It depends if the liquidations are over. Is this could gold? I mean, it's still holding its bullish trend. Could it go up after if the liquidations are over? Very possible, especially since if we're in a recession. It looks like we are. Certainly, we are in bearish territory when it comes to the market. When it comes to the technical picture, it's behaving like we're already in a bear market, even though we're not down technically 20%. Gold is holding. Okay, it might continue to go down. If we really have a big recession coming up and the market's down 20, 30%, gold will still take a hit. It won't be down 20, 30%, maybe 10, 5. It'll hold, but it won't do good. Other commodities like copper, as you can see, copper was holding, but it too got destroyed. Back down. It looks like it was going to break out. Perfect picture, but Thursday and Friday, Trump's comments, because people think there's going to be some kind of like recession and slowdown of trade, copper goes down big time. Okay. So holding up Thursday, Friday after the Liberation Day, again, liberated from profits. That's what Liberation Day stood for. 2 days of destruction on copper. And as you'll see, it's the same with silver. It was holding before. 2 days of massive destruction on silver. It too looked like the copper chart. It was going to break out, and this just knocks it back down. It's still holding the low. I mean, maybe if Trump comes back and says no to these devastating tariffs, it could come back, but this is a lot of technical damage. It'll take time to heal. Okay, same with the market. It's the same picture. So you have these commodities, even oil. See, past 2 days, boop, boop, breaking below that long-term. If it breaks below, oil is going down to 42. Breaking below a long-term 65-ish level on WTI. Look how far that goes back. Okay. It was a very important level. Tested, and now break. Okay, Friday was the break. It was holding for a little while. Friday was the break. So this doesn't look good. This means demand destruction, recession type thing, action. So you have all this commodity complex, copper, oil, silver, all going down, gold going down, even though it was holding at the highs. That'll That'll be the commodity that holds the best during a recession is gold. Okay, so that's what I thought I'd bring up. And of course, when you have commodities and everything falling down, you have the TLT, which is the long-term bond, going up. It's the exact opposite of rates. Let's get rid of the moving averages so you can see it cleaner. As you can see right here, ripping the past week. This was the week that we just finished. Big move because it's the exact opposite of rates. US 10-year, like we said, we're not going to have inflation. That idiotic University of Michigan inflation expectation survey where people think inflation is going to be 5% in all of 2025 is ridiculous. Okay, especially when you have a recession, you're not going to have inflation. So look at that, devastating past week for yields, but it's good for the bond. This is the bond yields. Okay, we're looking at the US 10-year yield. Okay, not the price of the bond. It'll be the opposite. If you can see, it's a head and shoulders type of pattern here. So it's going to go down. I mean, it was below 4, but now it's at 4%. It can go down to 350 right here easily if we continue to drop like that. So yeah, I don't think we're going to hear anything about the bond vigilantes anytime soon, and inflation's coming. 5%. Let's look at the break-evens. The 5-year break-even, big time down. Now it's at 2.5% expectations for the next 5 years. Okay, there's no way inflation in 2025 is going to be at 5%. Okay, that's just a ridiculous survey. We should just throw that away. I can't believe the market reacted to that. So we have yield going down. We have commodities taking a hit. We have the S&P 500 down big on Friday. What else held? Well, out of the blue, we have Bitcoin that actually held its ground. This is massively surprising to me. Bitcoin, it's actually up 1% on Friday. Okay, unbelievable. I can't believe Bitcoin is holding. Okay, this should be down here, 67, 68. But apparently people are using it as a safe haven. But not gold, not every other commodity. This. I don't understand why Bitcoin, I guess institutions aren't holding it. The only thing that I can think of is that institutions aren't holding it. So when they got margin called, they dumped what they're holding, which is like they're holding commodities, they're holding gold, silver, and etc. But they're not holding Bitcoin in any large amount because they would have dumped Bitcoin. But it's too small of a market, so that's the only thing I can accept. Retail isn't dumping, and institutions, I guess, aren't large enough to dump this yet. Maybe they'll dump it later if we really get hit. This will probably come down too. But the big news is that Bitcoin is going up. And this has surprised me. Everything is flipped on its head. Trump really screwed up these markets. I've never seen this kind of craziness. You have Bitcoin up when it should be a massive risk on asset, so it should have gotten killed. And all of a sudden, it morphed into a risk off asset. We have fear and greed at 4. Okay. I've never seen this. Seriously. I've never even seen extreme greed at 96. Okay. Let alone, I've seen it at like here, in the midpoint here, maybe 90, 91. But I've never seen 96. I've never seen 4 on the fear and greed index. Okay, this is just pure, massive fear. Everything is tilted to the sell side right now. So, in conclusion, bearish technicals, bearish outlook, expecting some kind of bounce, odds are, okay? It's binary, like I said. We're going to get a bounce or we're going to get no bids. We're going to hit the 480 quick. It's going to be like boom, 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 like a waterfall, okay? Which is crazy to think about, but, you know, this administration, anything is possible, okay? So, and, well, Liberation Day, I guess we're not very liberated after all. And let's see what happens next week. Bye, guys.